Hi guys, welcome. In this video, we're going to discuss two major topics. One, how day traders are investing in the VND, the Vietnam Dong, and how they double dip and earn a profit no matter what. We may be able to learn from these savvy Asian investors. Two, we are going to look at the crossroads of how ancient civilizations, Iraq's neighbors, are affecting the adjustment of the Iraqi Dinar currency. This is major. But first, remember the channel's membership. This past week, we discussed qualifying investments in startups that are expected to deliver massive profits in the future. Now, these stock market recommendations come from financial newsletters that the channel pays for. These are the same newsletters that investors globally are receiving and acting on.
If you want to understand where the Iraqi dinar might be headed, watch this video, and the Middle East neighborhoods where you have Arabs, Persians, Turks, and Israelis involved in peace, partnerships, and reforms. Now you might wonder what the hell this has to do with the IQD adjustment or revaluation. Everything. This video will connect the dots for you. Imagine four family trees growing side by side. Arabs trace much of their heritage to the tribes of Arabia and to Abraham's son Ishmael, spreading their language and culture across North Africa and the Middle East after the 7th century. Turks began as Central Asian steppe peoples who moved west and built the Ottoman Empire, linking Europe, the Middle East, and North Africa under one rule for centuries. Persians, today's Iranians, descend from the ancient empires of Cyrus and Darius. They speak Farsi and are culturally distinct from Arabs. Israelites trace their line through Abraham's son Isaac and his grandson Jacob, also known as Israel, forming the Jewish people whose ancient and modern homeland is Israel. These four groups of people are close because their countries literally touch: Turkey to the north, Iran to the east, the Arab world surrounding them, and Israel on the eastern Mediterranean. Their borders, trade routes, religions, and histories overlap, so cooperation and friction are both common. Before we zoom into Iraq, it's important to remember that today's Egyptians and Israelis are not exactly the same as their ancient ancestors. So, ancient Egyptians, they built those impressive pyramids, worshipped many gods, and had their own language. Over the years they mixed with Greeks, Romans, Arabs, and others, which means today, most modern Egyptians speak Arabic and follow Islam. Yet the land and culture still connect them to their past, don't they? Now, the ancient Israelites, they were the Hebrew-speaking folks from the Bible. After centuries of being scattered all over the world, Jewish communities returned and established the modern state of Israel in 1948. So, when we say Egyptians and Israelis today are a shadow of the originals, it really means they've changed over thousands of years but still carry pieces of their ancient roots. Alright, let's zoom in on Iraq, the crossroads. Iraq shares its borders, oil markets, water resources, and security concerns with Arabs, Turks, Persians, and it's just a short flight away from Israel. When Iraq manages to improve security, balance its ties with Turkey and Iran, and keep trade flowing with its Arab neighbors, investors tend to feel a lot safer. You know, safer investment usually means more jobs, more projects, and stronger trust in Iraq's economy, and that trust, well, it supports the Iraqi dinar. But when tensions rise like cross-border attacks, militia clashes, or pipeline disputes, business tends to slow down, risk goes up, and confidence in the dinar weakens. It's quite a balancing act, isn't it? So, the value of Iraq's currency isn't just about math, it's about stability. Sandy wants me to repeat that. The value of Iraq's currency isn't just about math, it's about stability. In a calm neighborhood, the dinar has a better chance to grow. In a tense one, it struggles. Now let's turn the page and take a look at how day traders are investing in the VND and how investors in Vietnam double dip and earn money no matter what. Gold in Vietnam has always had a special role because people see it as a safe store of value when the Dong, or VND, weakens. For generations, Vietnamese families have saved in gold bars or jewelry, treating it almost like a second currency. When the VND loses value against the US dollar, the price of gold in Dong usually rises. This happens because global gold is priced in dollars, so if the dollar strengthens, it takes more Vietnamese Dong to buy the same amount of gold. In this way, gold often moves in the opposite direction of the Dong's strength. Lately, the Vietnamese Dong has been under pressure as the US dollar continues to strengthen. In recent weeks, banks in Vietnam have been selling the dollar at record highs, reaching around 26,560 to 26,650 per US dollar, while the central bank's official reference rate has also climbed. This marks one of the weakest points for the Dong in years. The State Bank of Vietnam is watching closely, tightening rules on foreign exchange to ensure stability and prevent illegal money flows as the country prepares for new financial hubs. A weaker Dong makes Vietnamese exports cheaper for buyers abroad, but it also raises costs for imports and increases the importance of carefully managing the currency's value. For investors, this currency movement creates opportunities in the Forex market. As you know, Forex trading is simply buying one currency while selling another at the same time. In the case of the VND, if an investor expects the US dollar to rise against it, they can go long on USD VND, meaning they buy dollars now and hold them until the rate climbs higher. For example, if someone buys dollars at 26,400 Dong, and later the rate rises to 26,600 Dong, they can sell those dollars back for more VND and pocket the difference. The key is to use a reliable Forex broker, track live exchange rates, and apply risk tools like stop-loss orders to limit losses if the market moves the wrong way. In simple terms, Forex investors can make money by predicting whether the dollar will keep rising against the VND. Buy dollars when they're cheaper, sell them back when they're more expensive in VND, and the difference is profit. The challenge is timing and staying alert to economic news. But that's exactly why many traders see opportunities in Vietnam's current currency shifts.
Guys, if you don't want to be stuck watching your phone or computer all day when trading, there's an easier way. The channel invests in the stock market on autopilot. Take the spare change from your bank account and add $5 a week or more and invest it automatically into Fortune 500 index funds. It's simple, easy, steady, hands off. The link is in the description.